thank you to everybody for your attendance tonight. As Marty said, I'm Tim Jones, Managing Director, MMJ Wollongong, a position I hold very proudly and in third generation. So it's great to see everybody here tonight on such a cold winter's night. I think it's a good effort just to turn up, so thank you for that. And hopefully our commercial update will give you some takeaways tonight at least. Looking around the room, I do see a lot of repeat clients here, very valuable clients, but I do see a lot of clients that are probably clients of one, maybe two of our departments, and that could be simply because you don't know of our umbrella of services that Marty alluded to, and there are a lot of different service lines under that umbrella. So tonight you'll hear from many different speakers, most of them lined up over here. Michael Croghan was having a black beer before. I think he's a little nervous. And Travis was having a scotch, I think. So you'll hear from a lot of our specialist department leaders there. So utilise the panel up here later, and as Marty said, ask as many questions as you can. Look, I think it's probably important to touch on the word Marty used, which was specialists, and that's something we do a bit different than every other real estate agency. We are specialists in our field, and that means we don't have our management team going around leasing properties. We don't have our town planners going around selling properties. Thank God for that, because I've seen Luke try. He'll speak later. So we do like to specialise in our own little niche areas, and we think that provides a service that's unparalleled in the industry, particularly in Wollongong, the state, potentially even the country, with the level of service line we offer and the niche specialists that we provide in each of those service departments. Again, as I said, thank you for turning up. I do trust that you'll get something out of this in one way or the other. As a worst case, it's a good networking event. There's some heavy hitters in this room tonight, so lean on each other, talk to each other about the year that's been. It has been a very tough year, but a very fruitful one. It's probably taken a toll on a lot of people, but have a drink, have something to eat, and have a chat, and be merry. Enjoy your night.
Thanks, Marty. So for those that don't know me, I've been involved in business sales since about 2007, and I joined MMJ in 2019, and I head the business sales and acquisitions team. So to understand the current market conditions, we can't just ignore what's taken place over the last 15 months. So early on last year, from about March to June, I had many discussions. That's what I do every day. I talk to business owners, business buyers, and they were thinking about selling their business. Pandemic hit, well, very much it was all about survival mode. No one knew what was going to happen. So for our market, it meant business owners really just changed to survival mode and not in a selling mode. However, the start of this financial year, things changed. We saw signs of recovery, very similar to what we saw in the video. There was an increase of inquiries from business buyers, and that was really encouraging. So the business buyers really came from two main groups. The first group were business owners that were looking to acquire a new business, and we think, is that the right time to buy? But these businesses were healthy. They survived and quite resilient, survived that quite turbulent time around the start of the financial year. And the other group came from employees that were employed in industries that were actually quite vulnerable. And an example of that is that we were involved in a sale of a business in Coldale. And we had really strong inquiry from others in the tourism and or mainly hospitality sector. And the other strong inquiry was from employees wanting to secure their future in business ownership. So that period around July to December was actually a really good time to list your business. There's actually a shortage of good quality businesses on the market, but there was an abundance of sellers. In fact, the buyers, I should say. So the level of buyer inquiry returned to pre-pandemic levels, so that was really encouraging. So so things are really taking shape and returning to normalcy. I'll just go through, and that's our business sales team. So we're the only office in the Illawarra that are dedicated just purely to business sales and and more about some businesses that we've recently sold that are in industries that are in strong demand. So the first one here is an engineering compressed air business based in Fremantle. And I've pointed here to this price earnings multiple. If you're not aware, there's obviously a relationship between the annual profit of a business and typically what a business will sell for. So it's typically referred to as a price earnings multiple or a multiple of earnings. And that particular business, 43% return on investment for a new buyer. The buyer of this business was an employee, came from within the industry. So the buyer actually knew the business quite well. Again, another business that did really well during the pandemic. You'll also see some days on the market. We're very different to today's residential market, where I think a listing stays on the market for about 10 or 14 days. In business sales, the metrics are very different. Another industry was in construction. Again, a construction business, one that was bought, a particular one at Huskisson, was bought by somebody, or the buyer of that business was an employee from a vulnerable industry. And the last one there, a tile and ceramics business in Barrel, was purchased by another player in the industry. In fact, an existing business owner that has multiple, might have 10 stores up in the Highlands actually. So I might whiz through this part. You'll just see some other examples of businesses. Have a look at that return on investment type line. That's typically a business that in demand as low as 23%. In business, typically higher risk, higher return, 50% return on investment, 72% return on investment, so quite high. As I mentioned earlier, there's typically a relationship, as you know, between the profitability, the annual profit of a business, and what it achieves on the market. So these are actual recent sales. So you'll see the higher the earnings, the higher the business sale price. Now, that red line represents a line of best fit, and you often hear in the industry, what multiple of businesses sell at. That's helpful just to understand a typical relationship, but every business is different. We find that some businesses in the high demand industries will sell at a multiple of 1 to 4.3 times profit. Where an industry, for example, retail or vulnerable retail food and beverage will sell anywhere between 0.5 to 1 times its annual earnings. That's the typical range. Again, reflecting on that vulnerability of business. Some recent businesses that we've listed, and just to sort of present the industries that are in demand. Solar sales and installation business that will sell at a typical reflection of return on investment about 33%. A supermarket business, again, strong retained earnings for that industry, and in-demand business as well. And you might have heard that bike shops have been very profitable over this pandemic period as well. So in summary, while the last 15 months have proven to be a bit of a roller coaster ride for some business sales acquisitions, our industry now is actually quite robust. So there's a lot of demand, a lot of activity in that space, particularly for the industries that are in demand and quite resilient to what has transpired in the last 15 months. So in summary, we're definitely looking quite positive for our outlook. Right, that's it for me. Thank you for listening, and feel free to have a chat with me afterwards as well.
Thanks, Marty. Back to real estate. So thanks everyone for coming. As some of you know, I'm in commercial sales for the Wollongong team, and work alongside Jeff and Tim and Michael Farina. There's our team there. We've got Katie is also giving us a hand. So again, dedicated to commercial sales only, and we leave the leasing to Michael. Sometimes I help out from time to time on the more complicated deals, but mostly I stay with commercial sales. So I was just going to cover off on a few little snapshots which themselves give a bit of a story. First one is Belambia Lane. This is a development down at Belambia, of course, down on the eastern end, just next to the Holy Spirit College there. This one was owned by Wayne Gardner, obviously he chose 87 to be the number of units he was going to build as his famous year of championship. And this is 87 units, all exactly the same size. We sold in 3 stages, and the first stage, which you can see completed there, finished in December last year, and at that time there was about 6 weeks or so to go before the development was going to be finished, and Tim and I were sort of thinking about, do we give this listing back? It's been struggling. We've had all this inquiry, but no one really wanting to meet the price point, just under 500,000. So about 96 square metres with 46 of mezzanine. And we decided we'd do an open day 3 weeks out from completion, and we had 30 people turn up, and which was huge for an open day of a commercial property. We don't normally do that. We keep our weekends free. But people turned up, gave us money. We got deposits on that day, I think. We did another open day 4 weeks later and actually sold out of that first stage 1, which is about 18 units, all within $5,000 of the asking price, and that led to another 5 sales in stage 2. So within 3 months of that open day, and March, April coming, we were already well into stage 2, which at the time the developers weren't sure whether they were going to continue with. But we were able to show a finished product, which really did pay dividends, and in the end they ended up committing to building stage 3 at the same time. So as of 2 weeks ago, we've sold out of that development, all off the plan. 80 something units, and for a development like that, it's a great achievement. There is a lot of to be said about northern suburbs commercial property, because it's just hard to find. The further you go north, there's less land to use, there's less developed land. So that is really highly sought after, and they all sold mostly to owner occupiers, and towards the end we started to sell some to investors as well. But getting $200 a square metre for a lease, well, that was actually pretty good. So that was a great result, and we're very proud of that one. Thought I'd just mention a retail sale. That's 141 Crown Street, which is the Commonwealth Bank in the mall. During the pandemic, of course, there wasn't a lot of stock coming on the market, so what we found, anything that was coming on was getting a lot of attention. This year's basically been the best year that we've had in the company's history. Last year was our best, this year was double that. So if that's an indication of how the market's been, it's been busier than anyone ever expected. So this one here, obviously, great covenant. I think there was 7 years left on the lease, 7 years from memory. Obviously great tenant in a bank, and freehold, and sold at 5% net return. That was snapped up pretty quickly. A lot of inquiry on that pre-auction, so in the end, that was taken up pretty quick. But anything with a good quality tenant with a longer lease was very, very much sought after. This one here just gives an example of a development site. Development sites have kept us the most busy this year. We've done a lot of transactions off market, and that's really been the way that market has gone. But this one in particular would have normally been a property that we would have sold via expression of interest, but there was a court order on this one, which meant that we had to auction it, which is very unusual for a development site like this. No DD, we went to the market, 4 auction, 4-week campaign. The valuation was somewhere in the order of 10 million. And we had no expectation, we got no information to the marketplace. We had a full room like this tonight, even catered, which you don't normally do for an auction, and invited my dad because it was entertaining. And we sold it for 19.6 million, which is huge. It's the highest price of any auction, I think, in the Illawarra, let alone any development site in the Illawarra. So I think it worked out to be about 127,000 a lot, which is massive, but just testament to the demand for growth in that area for land. Just a quick wrap on the market, which I've just touched on. So basically, Wollongong's really being noticed by the city market, and we really push home or push the buyers when they come down and visit us when they're looking at commercial property, how amazing our town is. But now people are finally starting to realise it, and that leads to commercial businesses wanting to get out of the major cities. That's happening across the country. So the trend is looking for upcoming regions that are actually providing something alternative to the city. and Wollongong is doing that in spades, which is why we're going so great. So I'll just touch on what market sector is actually the strongest, which is actually industrial. So industrial has probably been the less affected by the pandemic. It's really pushed through the demand for industrial land, especially those big box warehouses. We get inquiries on that week in, week out, and we just can't offer them anything. So many of those large sites we're sort of taken up and built those little shoebox warehouses that are selling like hotcakes. But to have a big shed like that one there, I think that was valued at 5 million. We sold it for 8.6 under EOI. That was a tender actually, and that was a massive result for that property. But that's just been again another example of how strong the industrial market is. Port Chemicals is coming along really nicely. Logistics companies, storage and manufacturing are really looking for space out that way. So again, Kembla Grange will probably be the next area where we can look to grow into, because there's nothing coming out of Port Kembla. There's no more space in Unadera. There's nothing up north, and that's about it. So, any questions? Ask me next.
Right, guys, now we're getting on to the fun stuff, town planning. So, this is our personnel, this is our department. We've been running town planning at MMJ since the late 80s. But many of our clients still don't know that we do town planning, so I thought I'd give everyone a lesson on what town planning is to start with. Essentially, if you ever played SimCity as a kid, I am an adult SimCity player. So basically we build cities, we shape towns and regions through planning outcomes. Ourselves, we're consultant planners, so in the early days of planning it was only a government job, but probably over the last 4 decades, as development's been privatised, the need for planning has been exacerbated, and that has certainly been exacerbated further by the difficulty of legislation. So probably, if anyone knows the New South Wales planning system, it's probably the worst in Australia, and the most complex, and it needs an overhaul, but we have to work with it at the moment, and it's good for keeping guys like me employed. So we're generalists, we work across all property sectors, so we don't just stick to residential or commercial. We work across all parts of the region, which has been very evident over the last 12 months during COVID as well. Good planning versus bad planning. So PIA has a standard pro forma of what they believe good planning is, but for me, it's pretty simple stuff. So it's creating environments and places where people want to live, work and play. I think if you can follow that through all your development outcomes, you're doing something right. Bad planning, for me, it's irrational and unrealistic development outcomes. Okay, and that is what kills planning outcomes. Is decisions, inadequate infrastructure, poor design. These things are all coupled by unrealistic or irrational development. Bad planning, we've got some examples here. So the Department of Planning didn't plan for their sign there. We've got a cycleway straight into a road barrier, and we've got a beautifully engineered design outcome where the PID for stormwater is higher than the flood level. So that's examples of bad planning. Examples of good planning, this is a town planner's dream. So we've got utopia here, we've got active streets, we've got tree-lined streets, we've got shop fronts, we've got people on their bikes, walking, sharing paths. So that is essentially good planning. At MMJ, we offer a range of planning services. So our main work is around DA work, rezoning work, and property advisory, particularly around due diligence and site capabilities and feasibilities. So why would you use MMJ town planning? Well, showstoppers are a big thing in planning. I can't tell you how many times someone's come to me and said, I bought this site, I want to do this, and then I quickly look at it and say, you can't do that, it's not permitted. So getting in early and getting advice from your planner is a key thing to do when it comes to property acquisition. Unique insights. I think at MMJ we are better placed than anywhere else because of our real estate background, to give a unique understanding of property markets and trends that are happening through development. And I think coupled with the advice we get from our commercial and our residential real estate agents, I think that is a synergy that you won't find anywhere else. And I think that's one of our greatest strengths for actually achieving realistic development outcomes. We add value. So I think for me, if I can have a client walk away knowing that I've given them all the advice to improve their choices for a property, I think I've armed them with enough. So if they have decision flexibility in the way that they dispose of the land, develop land, acquire land, then for me, that's the greatest value I can provide to my clients. And the system is getting harder. It's not getting easier, it will continue to get harder. And for us, we aim to streamline planning for our clients. Where the MMJ synergies have worked really well with our region, our real estate arm, is a couple of examples. So Headlands Hotel, this was a dormant site for 25 years where a previous owner tried to do residential development. I've never seen a site that's had more DAs on it, more DAs refused in 25 years than this site. And it took a pretty savvy client of ours to come and actually ask us the question, can a pub and some service departments work here? And it was through confidence in our real estate arm, and it was through our planning arm uncovering that there was a historic court consent that had been activated from 2004 that we could actually use and redevelop. Then that actually created this development, and it's probably one of the most successful pubs on the east coast of Australia now. So great synergies through MMJ. Edgewood Estate, legacy development, typical urban infill, 700 products over 15 years. We helped acquire that land, we rezoned it, we did all the master planning, we did every single DA for nearly every product in there, and that was all on the back of our real estate arm under one roof. So Signature is another recent example. We didn't do the original DA for this, but we were involved in multiple modifications throughout the construction process. So this project kicked off in, I think, 2016. It was a long build, and what happened during that time is the market changed. So with our projects division, we were able to quickly respond to the market by modifying that development to improve the outcome for that developer. So that was something where the synergy worked really well. Development trends, so residential, crazy gangbusters. The last 12 months have just been out of control. They're always the stalwart. Residential's always the stalwart, but the amount of DAs that we've done for residential across all types of residential, aged care, seniors living, residential flat buildings, shop top housing, has just been absolutely outrageous this year. What we've found with that is that there's been high demand for services and education. So we've never done more childcare centres, we've never done more medical centres, we've never done more education than we have at the moment, particularly New South Wales TAFE. And you will find there's a gym on every corner. There are gyms everywhere I go. We've never done more gyms than what we've done in the last 12 months. We've also actually found a couple of industries that buck the trend. So, you know, with all the world going to green, fossil fuels and living, mate, the amount of service stations I've done in the last 12 months, I couldn't even write it down on a piece of paper at 84. Fast food, again, gangbusters. Something that really picked up during COVID when everyone was shut down. Fast food was killer. Hotels, that's been really surprising for me because hotels require a unique market, and that's something that's certainly pushing the boundary. Then we've got our industry and storage. Two things I just wanted to touch on before I go. I'm getting the chop. Planning changes. No longer is it, I guess this spot rezoning is going to be a thing to come up on a regular basis. So the Planning Act changed a couple of years ago that basically made council prepare these local strategic planning statements. part of the Act now requires that unless you're in that document and you're consistent with that document, no longer will council accept or can approve and carry through spot rezoning. So I fear for a lot of these dormant sites that are quite large, over time it's going to take a lot longer to rezone them because you have to get them in the planning statement first before you get it to rezoning. So that's a legislation change that happened 2 years ago that I don't think has come through yet, but it will. And then the big one that's happening in the region at the moment is the Wollongong City Centre. So in December, Council approved the urban design framework to rezone along the city with change in FSR heights, zoning, etc. That got deferred subject to a lot of additional study works they need to do around retail hierarchy centres as well as access and mobility. And what I'm finding at the moment is that everyone who owns land in Wollongong City Centre is doing the DA now to cover and acquire that floor space because a lot of them are going to lose it as a result of these changes. So that's about it at the moment. I could talk for longer, but I've probably gone through 2 presentations in terms of time. So yeah, feel free to grab me after, or I'll be on the panel for discussion. Thank you.
For those of you that don't know me, my name is Tracy Preston, and I head the Commercial Asset Services Division of MMJ. I've proudly held that role for 14 years now. And the reason I say that I proudly hold that role is that my team at MMJ are absolutely phenomenal. All of them have been in commercial asset management for over 10 years, and to have that under one roof is just absolutely amazing. What that has meant is that we look after properties and facilities management across the full spectrum of commercial property assets. Because our team is so highly specialised and skilled, we're able to have people that specialise in portfolio management, which is myself, Chris Hogben and Andrew Burrows. We have Senior Property Manager Melody Reid, and we now also have a Facilities Administrator, Julianne Little, who purely looks after all of our work orders. And that was something that we did in the last 12 to 18 months, and it absolutely changed the way that we run our business. And we have Kim Hastings, who's been with us for in excess of 20 years, looks after all of our accounts. Because we have this team, we've been able to come through COVID in a really, really strong position. The experience of all of that team has told us that there was far more to come after COVID. A lot of other management agencies had staff that just quit out of asset services during that period of time and really didn't want to know about it. It wasn't an area that was terribly glamorous to work in, and we found that people were not really treating their property managers that well, and so property management wasn't something that people wanted to stay in. We all agreed in our team that the activities of the last 12 months have defined a new era of asset services management. I've been in this game for 25 plus years myself, and over that time I've seen so many buzzwords, so many different focus points. I don't know how many years I've spent at Property Council functions talking about green buildings and sustainability. Back in the day when I first started, there was Y2K, if anybody remembers all the buzz around Y2K. I think we can all remember in this room how long we spent at GST seminars. Everything that came along was going to be something that was going to absolutely change the face of what we did in property. And it did. It changed a lot of things. It really shaped how we dealt with commercial leases. Leases used to be this big, and leases got this big when we started to put green building clauses into them, and when we started to have to deal with a whole raft of information. But then came COVID-19, and we didn't think for 1 minute that the things that happened were going to shape what has shaped the next 12 months and onwards. The slide that I have here, because we have been doing this for so long, when COVID-19 hit, we knew that we would be hit with a certain raft of businesses that would become very vulnerable and that would potentially default. So on the basis of that, we went through the most vulnerable and the least vulnerable. The least vulnerable, our government tenants, our supermarkets, and so on and so forth, down to our most vulnerable, which were normally your furniture, your white goods, the tourism and travel and homewares. They're always the first things to go. What did we see when COVID-19 hit? We turned that upside down and everything changed. We would never, in our wildest dreams, have thought that one of the least vulnerable areas of commercial real estate was going to be furniture and homewares. Harvey Norman traded their head off. We had a lot of national retailers that did the same. Those national retailers, unfortunately, were the first ones that came to us and put their hands up for rental relief. So when we knew that there was going to be some kind of help come along in form of some kind of government assistance, we made sure that our tenants worked with us. When we first heard what was happening with COVID-19, we were making sure that we were listening to every press release, not as it came from another organisation, straight from the Prime Minister's mouth. Didn't matter what time of day or night, we were listening to that press release, that press conference, and we were disseminating that information for ourselves. We were taking that information and taking it straight into what we did for our clients. The very first day of the announcement that there was going to be closures of businesses, we got on the phone that next day. I remember sending text messages to our directors after we got that notice about 10 o'clock that night and said, guys, we're on it. Tomorrow, this is what we're doing. With my team that next day, we rang 120 businesses. None of those businesses knew what was going to happen. We didn't know what was going to happen. But the purpose of us ringing them was to say to them, we are with you. The same for our clients. We knew that things were going to change. The first thing that we knew was that there was going to be grants for businesses. So we set about educating our tenants to what those grants were. Rather than having our tenants deal with how they were not going to be able to pay the rent, we made sure that they were able to find ways that they could pay the rent. We also asked them to wait with us and make sure that they continued to trade their businesses as best they could. The reason we did that was that we were working with the Property Council behind the scenes, and we were part of the information that was going to government. On a twice daily basis, we were providing information to government over the course of about 3 weeks, straight from our office, so that they knew what was happening on the ground in a regional context. With that information, we were able to make sure that we were part of what was going on. So when the legislation did hit, and we all know what happened when the legislation hit, we were at the leading edge. Because we've been at that leading edge, we've been able to very, very proudly have the majority of our tenants come through without any change to their rentals. There have been a few, and there have been a few casualties, but those casualties were businesses that generally didn't change. All of those businesses that changed, that moved with the times and pivoted, to use that term, to a different type of business, came along with the ride. So we left the end of COVID-19 with a renewed sense of what was going on in that marketplace. Just a couple of the takeaways that we have found and that we're dealing with now over the next 6 to 12 months. Option leases aren't being taken up as readily, and there's a shift in decision making. So that decision making is happening a lot more slowly than what it was before. But the retail space, where shift in risk behaviours of tenants is making sure that they're getting ahead of their curve, we're seeing that those tenants are staying in place. The one thing that I'd like to leave you with is that what we do in asset services isn't collecting the rent. It's about maximising the value of your asset through all conditions. That's what we do, it's what we do well, and we'll bring you through all of the conditions as they change. Thank you.
This is the first time I've heard a couple of these guys speak. Actually, they're pretty good. I'll have the best to last, but maybe you'll be the judge. So, Michael Croghan, head of leasing at MMJ. Basically, we're the only specialist leasing team in Illawarra. This year, in particular, I'll give some credits to Jared, who's joined the team. He's been doing a great job, and we'll see some of the fruits of bringing Jared on board a little later. Team. I'll just give you a quick overview in terms of how I'll approach tonight. I'll give you basically an overview of the last 12 to 18 months, some highlights or some takeouts that we've gleaned off what's happened, and some predictions for the future. Obviously, that is from a basis of a broad overview, so there's always going to be individual differences. Read into it what you will, but there'll be variables involved. Okay, so this is high-level type stuff. So what I've experienced in the last 15 years doing leasing is we are very much aligned to business confidence. So if business confidence is down, our job becomes a lot harder. If business confidence is up, things certainly get a little bit easier, there is no doubt. We're usually I'm in a middle distance run to a marathon, not always in a sprint. When the sprint comes along, happy days. But you have to have the aptitude to stick it out and stick with the program. So in terms of an analogy, I think we're almost the canary in the coal mine in terms of what we provide. So if you cast your mind back just before COVID, we had 3 to 4 strong years on the leasing front. We had probably 12 months leading into COVID, which were fair, wouldn't be great, but fair. We certainly expected conditions to ramp up just after Christmas, which they traditionally do. COVID was coming, we kind of knew it was coming, but no one really knew what it was going to be. And then all of a sudden everyone gets locked down and obviously it's very shock, right? So it's not the shock that really hits, it's the everlasting uncertainty. And uncertainty in business, as you guys would know, it's difficult to make decisions. You don't really know what to expect and how to adjust and set the course for the future. That directly impacts on leasing. So if you look to the canary, the old canary was going to be a bit tough to start with. In terms of what we've gleaned, if you look at an analogy for different businesses, they're different beasts, right? So same set of conditions will impact on different businesses in different ways, and we certainly found that. And there was winners and losers out of COVID. The rabbit. So basically, what we found over a little period of time was the guys who were nimble, who could make decisions, who didn't have a big decision tree. There wasn't too many people involved in being able to make a decision. They were actually able to move forward with some confidence, as much confidence as you can have in a pandemic, and do some deals. So the first month, just after lockdown, we actually did 4 deals with small accountants. So you quickly found out where the money was going. And whereas the big guys, anything with the bureaucracy, any government departments, any corporates where various people are involved in a decision tree, pretty much they were in the wait and see and sitting on their hands. So if you look at the big guys as a bigger beast, like a cow, they're basically sitting on their hands. Now, you can only sit on your hands for so long. It's not going to be a pretty sight when the traffic comes back along the road, and so you're forced to do something. So we're pretty much at the stage now. We believe the confidence has come back. It's a well-known thing. Business confidence is certainly up. It's at some record highs in some reports. And the traditional migration to greener pastures and the big boys making decisions and taking the leap we believe is starting to happen. So one thing that came out of it, which is quite unusual, is we've actually transacted in the last 12 months more deals than we ever have before, even in really good times. And that was a bit of a surprise. If you look at the transactions, they're generally smaller in scale and also shorter in term. That trend to going short-term leases has been kind of evident for some time. I think it's been accentuated just of recent. More from the point of view, the world has changed so quickly that it's more of a rarity now that people will, or companies will, make a bold statement to go for a 5 or 10 year lease. It's not unheard of, certainly not, but it's less prevalent than what it used to be. Industrial, we expected industrial to be the best performer coming into the pandemic, and certainly I think that's been the case. Travis mentioned industrial before, we might talk a little bit about it further later, but the fundamentals for industrial certainly in Wollongong are solid. Retail was copying a bit of a hammering even beforehand. We think COVID's really accentuated that hammering. More for your traditional retail strip top shops. So the one notable exception, which is what Tracy mentioned, is bulky goods showrooms, and they've performed very well. Just that larger format, convenience scenario has held it in good stead. Commercial's been a mixed bag. We've done a lot of smaller deals. Certainly in the last 12 months, and I was speaking to Carl before, he does a bit of commercial fit-outs. It's hard to even think about one deal in the last 12 months. It's been over 500 square metres in size. but there's a few coming. So we're just with that confidence coming back, it's evolving and coming back. One benefactor we believe is the regions, and we've touched on it before, but Wollongong is a region. We've been sprigging Wollongong to all and sundry for years. I think the out-of-towners are now recognising the benefits of being in a regional centre rather than in big cities, and I think the regions have done a lot better than the cities have during this pandemic, and I think this is a great opportunity for Wollongong in particular. We've got a lot to offer, and we've come to the fore. One thing that came out of that, so I'll probably just go back for a second, is if you think about one barometer being the amount of office people going back to work, Melbourne's been hammered, they're only about 40% occupancy as of April. Sydney, 60%, and I would presume Wollongong is around about 80%. Certainly from our point of view, 50 staff, we were pretty much back in the office as soon as we possibly could. Most companies were in that same boat for Wollongong. There are some exceptions, which we might touch on a little bit later. Where to from here? Certainly, I think industrial will remain strong. The fundamentals are very much aligned that way. The port's been strong. Retail will continue to get repositioned. And if you look at the big guys, as in GPT, Stockman and those types of guys, they're all trying to adjust their tenancy mix for an experiential situation rather than just looking at transactional type little shops. So at the end of the day, if you can buy it online, it's a lot simpler, then that's what you're going to do. From a commercial point of view, of note, if you look at where Wollongong is at the moment, and I'm certainly getting wound up here, Wollongong has the biggest supply of A-grade space that we've ever had. Right? Now, if you look at the fact over the time that I've been involved, traditionally would take up about 3,000 square metres of space per year. We've now got in the order of at least 15 up to nearly 20,000 square metres of A-grade space. Now, from a landlord's point of view, that might be a short-term cash flow hit, but at the end of the day, that's actually a really good thing for the city because we have struggled to get new big boys to town because we haven't had the stock. We've now got the stock. We've had a really big shock incident that puts us on the radar. There are some opportunities there for us to kick goals on. So overall, the region we believe is doing very well and should continue to do so. Tough times are really the test for any business. At MMJ, we've got 50 staff. We've held a lot of confidence out of coming through this in a very good and strong manner. At no stage do we ever think about cutting staff, and that's put us in a good step for the future, of which we think there's great opportunities to come. From a leasing point of view, we've been involved in numerous deals. There's probably 3 regionally significant, one that I'll probably talk about today, that will divulge. That's it. Thank you.
Thanks, Marty. It's my pleasure to thank you all for coming tonight. You've been bookended by Jones, by the way, so my son was the introducing director of MMJ, and from Steve Hoffman, thank you. Michael, yes, this year will be MMJ's most successful year ever, and yes, it's solely due to changing managing directorship. So, I know a lot of you personally and through business, and I know your faces, and hopefully you know me. And look, I can assure you that the last 12 months in Wollongong has exceeded everybody's expectations. We'll go forward. We got some figures down last week that show some significant changes from COVID. 4% more people living in capital cities going to regions, and 4% less people leaving regions to go to capital cities. That's a dramatic impact. What it's impacted on is a region like Wollongong. Wollongong's led the way there. It's done a couple of things. One, it's put our vacancy rates, for example, in residential down to the lowest level they've ever been. That's without any impact from the university. So imagine when the university starts to kick in again, what's going to happen with our vacancy rates. So put a greater focus on Wollongong totally. It's given you a return of investment in Wollongong that's pretty much twice as much as you can get in Sydney when you add your direct return with your capital going. So those figures are there and they're real. The regions are outperforming the capital cities quite substantially. So the future for Wollongong is without doubt outstanding. So if you're in property, and I know just about everybody in the room either works in Wollongong, lives in Wollongong, or has invested in Wollongong, so congratulations, you've done very well, and you're going to do it better in the next 2 to 3 years in Wollongong without doubt. So, look, I started real estate in 1974, and my whole career has been in MMJ. In that 47 years, we've had a lot of changes in the way we have sold your property, managed your property, communicated with you, and particularly in the services that we provide to you. I've got no doubt in saying that the services we provide to you now and the people that we have on staff are the best ever that Martin Morris and Jones have put together. I say Martin Morris and Jones because that's the old company. MMJ is the way we call ourselves. We're the only brand to take ourselves outside Illawarra, and we had to do that to provide the national network for you as our clients to communicate with and to give you those assets to assist with your property needs. So look, thank you to all our speakers. They're highly talented people. Didn't know how talented they were until they spoke. At my age, I do remember all their names, and I say I remember their days. Thank you to Marty, a legend in the industry. You wouldn't believe what you're getting for a cold beer and a sausage roll, but we did tonight, so thanks Marty for hosting tonight. Tonight was the brainchild of Martin and Justin from Business Sales, so thank you to them for the incubation of an event that will continue. And we had some great assistance from Marketing Department and Katie and Barbara there as well, so thank you very much, girls, for all your efforts. I won't keep you from the food and drinks. Look, please stay around and have something to eat and a cold drink, and please discuss with any of the staff any questions you have. I think Luke starts about 500 now, down to Travis $2.50 an hour. Thank you all for coming, and enjoy the